All right, in this lesson, we're going to talk about one of the most important financial analysis equations there are. It probably isn't the most important from an accounting standpoint, but from a finance standpoint, from a business standpoint, this is probably one of the most important, if not the important for that reasoning, and that is net income. And the reason why it is important is because why do people go into business? Why are corporations formed? Well, they're hopefully formed because they want to make money. They want to turn a profit. Well, net income is that financial analyst tool equation that we use to figure out profitability of an organization. And so in this lesson, we're going to take a look at that net income. So let's dive down to financial metrics. So profitability, that's what we're talking about. Financial metrics are important gauges to assess the health of a company. So just like when a doctor orders blood samples to analyze your blood, the results from the lab gives us some insight on the health of you. So just as a doctor takes out blood and that gives them kind of an analysis of the health of you, the profitability or the financial ratios or the financial metrics that we use gives us a little bit of an indication of how healthy a company is. Now, of course, this is not the only way to predict health. So we can't just take one test from one blood sample to say a human being is healthy, just like we can't do that with this equation of net income or profitability. Now, net income is a financial metric designed to assess the profitability of a company. And of course, we're all about making sure our companies are profitable at the end of the day, because that's long-term stability at the end of the day if we're profitable. Now, does the company on paper make enough money? That's what we're trying to answer with this financial metric, with this equation that we are learning. Now, what is the equation for net income? The equation for net income is revenues minus expenses will give us net income. Now, this is a very simplistic equation that you're just going to need to know for now. It gets a little bit complex later down the road, but for what we're trying to teach you right now, revenues minus expenses equals net income. That's the basic net income equation, okay? So positive net income equals company is doing well. So you want to see a positive number at the end of the day. If you don't see a positive number, you're not doing so well. Now, that doesn't mean that you should always see a profitable number. If there is a recession, you might have a negative number, and it might be temporary in nature. If you're starting a business, you might also have negative numbers. That's okay as well, as long as you're working towards profitability. Amazon.com is one of those examples that for years lost a ton of money because they were trying to invest in everything they were doing. And then only recently, and again, I don't have that number or that timeline off the top of my head, but this is probably maybe 8-10 years ago, as of the recording of this video, they became profitable. They finally became profitable. And the reason why that was a big story was their stock price was so high, and people were like, why are people investing in Amazon.com when they have these negative numbers? And they've been negative for a long time. It was because they were investing in themselves, which now pays hugely when you look at how profitable Amazon is nowadays. So again, doesn't mean that you can't have a negative number. It's just you shouldn't if you can avoid it. So revenues, remember, that's cash inflows or inflows from services provided or things that you've sold. Expenses are those expenses that are incurred or the costs incurred in pursuit of those revenues that you're trying to achieve. Okay, so negative net income, aka net loss, company's not doing so well. So let's put this into practice. We've got revenues minus expenses equals net income. Here is a simple example that we can go through to just make sure that we understand this. All right, company A has a spectacular year by recording $25,400 in revenues. At the end of the year, the CFO And if you don't know what that is, it's the Chief Financial Officer. So CFO, Chief Financial Officer. That is the highest position in an organization when it comes to the finances of the organization. The Chief Financial Officer had mentioned the company had a net income of $12,500. What is the expense for the period? Now, notice in this question, we're not asking you what's the net income because we're given this. We also know revenues. Revenues is $25,400. So we're going to have to do some backtracking here. So we know that our equation for net income is revenues minus expenses equals net income. We know our revenues is $25,400 minus, we don't know what expenses is, so I'm going to designate that with an X. So that's what we're trying to solve. We don't know what our expenses are. Equals $25,400. Whoops, sorry. $12,500. There we go. So we've got 25,400 minus X equals 12,500. Now it becomes an algebraic equation here. So what do we do here? We'll subtract the 25,400 from the left side. And then we'll get negative X equals, so 12,500 minus 25,400 would give you like a negative 12,900. And we know that we have two negatives. Those become positives. So our expense for the year is $12,900. We can put that back in just to test it out. 25,400 minus 12,900 would give you 12,500. So the company incurred revenues of $25,400. They had expenses of $12,900 for the year, which would give them a net income of $12,500. Our answer here for total expenses is $12,900. So that is a look at net income. It's a super easy equation. Revenues minus expenses. Revenues is what the company takes in from their normal operations in their businesses. Expenses are all the costs incurred in pursuit of the revenues that they receive. So revenues minus expenses gives us what's left, our profit. So just like when you think about, you get a paycheck for $1,000 at the end of the week or end of 2 weeks, and then you spend 800 of them. How much do you have left? $200. That $200 is technically your profit because you've paid all your expenses and you have $200 left over. So that's kind of another way to think about it if you want some real world examples there. So hope you enjoyed this lesson on net income, and we'll see you in the next lesson. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video and we will see you in the next lesson.